Hi, this is Zachary from Zach's Traders Cafe with a look at some bulletin board hero stocks on Friday the 10th of June. Starting off with Ascent Resources, and quite a lot of work here to do with a chartist, a lot going on, a lot been going on as well. 0.78 was the February floor. Then obviously we had that big rally. Came back to test that zone for May, and then a final exhaustion gap and reversal. We closed back above 0.78, which is a plus. Almost filled the gap, top bottom of the gap there at 0.82. So end of day close or at weekly close back above that would be a decent buy signal over and above what we've already seen, which is a bounce off this April descending price channel. If we can hold above 0.82, the target here is back towards 1.2, 1.3 pence, which was support on the way down, and also going up towards the 50 and 200-day moving averages, which are currently falling around the 1.4 pence level. If you're already long, then probably the best stop loss at the moment would be around or just below the 10-day moving average at 0.68 pence. This stage obviously only back below 0.5 pence, really killing the idea of recovery here. Cloud Tag is next, and thankfully not quite so complicated as far as the price action is concerned. Already taking off, has been taking off since that bull flag based at the 10-day moving, rather 50-day moving average and 10-day moving average last month. Broke through the resistance there at 3.4 pence, April resistance, as if it wasn't there at the end of May, and then another consolidation, bull flag consolidation above the 10-day average, 4.87, and that's where we are now with the gap to the upside for yesterday's session, suggesting there's plenty of gas in the tank left, even though the shares are overbought. Big figure target here while we're above, let's say 4.5 pence, as high as 9.5 pence, which is the top of this rising trend channel, which can be drawn from the middle of 2014. In fact, this should just be a mid-move consolidation. Probably a point of interest there, that 4.62 resistance from the end of 2014, hence the 4.5 pence zone stop loss. On to a stock which has behaved itself quite well, considering how illiquid and basically rather light the trading appears to be here. We had the initial break above the 50-day moving average in the beginning of March, tested its support for April, gap through March resistance also in April, and then consolidation for May, another gap through resistance. And so basically a stock which is really appears to be quite rampant at the moment. Best guess as far as the upside is concerned, above 20, which was 19.5, which was the initial June resistance, heading up to 30 pence over the next couple of weeks or so. Any dips towards 20 pence regarded as a buying opportunity, and only really back below that 18 pence April peak, and the 10-day moving average at 18.3 pence really regarded as delaying the upside scenario in any meaningful way. Going on to another Twitter favorite, I would say Galileo Resources basically took off with this break of the falling wedge, or the triangle, from last September. Good support at and above the 10-day moving average at 1.13 pence. Should see a decent move here towards the 200-day moving average and up to retest 1.5 pence resistance for May. But the real gift, or the real fireworks here, should start with a weekly close above the 200-day moving average, allowing us to then go for a retest of the best levels of the last year at 2.5 pence plus. So basically above 1.5 pence, heading for 2.5 pence. Multiple support points on this RSI uptrend line from April in the last couple of months. Also a leading indicator on upside, and really at this stage only well back below the 50-day line at 1.13 pence, even beginning to question the bull scenario here. In fact, early bearish below 1 pence for Galileo Resources. Jersey Oil and Gas is next, and this really has been quite a beauty as far as the June price action concerned to date. A bit obscure as far as this rebound, double bounce off falling RSI trend line from February, but really second time lucky as far as breaking the 200-day moving average at 4.89 pence over the course of the end of May. Beautiful break of this former April resistance at 18.45 pence, and really while we're above that, heading as high as 35 pence over the next month or so, which is the top of an October rising trend channel. Any dips towards the 20 pence zone to cool off the very high RSI at 90 would be appreciated, nearly back below 16 pence, the floor of the channel, really questioning the buy scenario or the bull scenario for that stock. On Zima Ventures is next, and it's been quite a favourite of mine, and it's largely behaved itself, which is always useful. V-shaped bull flag breakout here for Wednesday, Thursday of this week, heading currently towards the top of the rising trend channel from October, as high as 1.8 pence over the next couple of weeks. We hope that old resistance at 1.32 pence would become new support, and really only back below 1.2 pence, that old March peak, questioning the idea that this stock is going to go to 1.8 pence over the near term. Finishing off with Clue Energy, still don't like the name, but the share seems to be performing, gathering some strength here. Double bounce for the RSI at the neutral 50 level over the course of June. Good support now coming in intraday above the 50-day moving average at 3.76 pence. So therefore, while we're above that on an end-of-day close, looking for 6 pence, which was promised before. At this stage, only back below the floor of this rising trend channel at 3.25 pence from the end of last year, really delaying or negating the buy argument for Clue Energy. That's it from me. More updates at the same time on Monday.